Your bank says one balance, your books say another. So which one is correct? If these balances don't match, your financial reports may be inaccurate. Welcome to FinCorp 360. Let's fix this step by step. A bank statement is the bank's official record of money moving in and out of your account. A cash book is your business record of what you believe happened in your bank account. In theory, both balances should be exactly the same. But in real life, they usually don't. This is called a timing difference. Money recorded by you, but not yet processed by the bank. A payment recorded in your books, but not cleared by the bank. Sometimes the bank records transactions that you haven't entered yet. And sometimes it's simply a mistake. Bank reconciliation ensures your records are accurate and trustworthy. Step 1. Collect your bank statement and cash book for the same period. Step 2. Create a simple reconciliation template. Step 3. Tick all matching transactions. Step 4. Adjust the bank side for timing differences.
In countries like Pakistan, withholding tax deductions must also be reconciled. In countries like Pakistan, withholding tax deductions must also be reconciled.
When both adjusted balances match, reconciliation is complete. When both adjusted balances match, reconciliation is complete. Step 7. Record journal entries for cash book adjustments. You started with confusion. Now you have clarity. Follow these 7 steps every month, and bank reconciliation becomes simple. Subscribe to FinCorp 360 for powerful, practical finance training.